Eric, we had a brief chat yesterday and agreed that we've been 10 years too early in our lives. And sometimes in the precious metals game, that doesn't work out so badly. It can be a very long cycle, and it's my third rodeo in a precious metals bull market. And I couldn't think of any people better than you and Alasdair to give us your reasons for owning precious metals, primarily gold and silver. The Dogbone portfolio is a 60-40 portfolio. It's 60% gold and 40% physical silver. Eric, if you could lead off and in simple terms, give people an idea as to why they should pay attention to this bull market that we're on the cusp of.
Well, thank you for the invitation, by the way, John. It's been a long time. I was thinking back to when were you emceeing something that we did in Toronto about 15 years ago?
We did it here, and it was the Royal Canadian Mint and Sprott Asset Management.
Yeah, okay.
And you mentioned a little stock named Kirkland Lake. It was trading at a price of $6.77, and it was October the 5th, 2016.
Right. And it got taken out at 70. So that was a good run. You know, it's funny when you make the comment that sometimes you have to wait. I was actually reflecting today as I think about the things that I like today, which therefore give me my daily frustration, which I've had every day of my life. I reflected back to Kirkland Lake and how it seemed so obvious to me when I recommended it that things would very much come together. But it took a long, long time. I mean, it might have taken a decade for that to work out. And almost every step of the way, it felt frustrating. Even though that stock went to, whatever the number was, 11 billion or 15 billion Canadian. I was the chairman of the company for a while. There wasn't much participation by the employees. It always seems difficult to get people to see what seems so clear to me at the time, and yet not participating. And maybe that's a pretty good lead into where we are today in gold and silver. I mean, it seems obvious. Well, let's go back because I've given many public presentations, and I would say as early as maybe even as much as 2000, I would say to most audiences that in my mind, the US government was broke back in 2000. And of course, they're even more broke today because of the entitlements that keep increasing almost exponentially and the ongoing debt that increases exponentially. You hit a point where you just can't work your way out of it. And I think that we are very close. We're seeing the dollar come under some pressure here lately. And I suspect it's going to go a lot lower as people realize that there might be better alternatives than the US dollar. And of course, no person better to explain it than Alasdair, who does a great job of it all the time. Yeah, he keeps saying it. We're not making money by gold going up. We're making money by the currency going down, which I think there's a lot of truth to that. So it's my view that we've worked in manipulated markets for all of those 25 years that I've been watching it. And it seems omnipresent to me all the time. And I just can't believe what we have. It's even like today. The US dollar has a little rally on the day and they just whack the hell out of gold. It's down $30. And of course, the day before when it was weakened, we couldn't get a rally. But the minute it strengthens, we get knocked down because the players that are short gold in the COMEX, the major banks, are kind of stuck. And I don't know when they're ever going to get out of that short position, to be very honest with you, particularly in silver. So we deal with the same situation day in and day out of a group of people. Big financial institutions are on the wrong side of the trade, and they're forever trying to make it look like we're on the wrong side of the trade. But as we've all witnessed here, we are on the right side of the trade, and everything just seems to be falling into place. I rarely get concerned about what the price is doing on a day-to-day basis, even though it's always frustrating on a day-to-day basis. So I think we're set up for a continuation of what's transpired here. And in terms of the new leg, I can tell you that as I look at things today, one of my favorite things I look at is I look at gold in the ground now, i.e. some guy who's drilling for it. And I'm starting to ascribe a value to that because I can see in the future here as gold goes to 3,000 and much higher, hopefully, that gold in the ground becomes exponentially more valuable. And the market will pay for it in due course. And perhaps the purchase of Cisco by Goldfields, where they paid almost $400 an ounce in the ground, will kind of lead people to realize, okay, well, you don't have to have a plan to mine it yet. You just have to have the gold. It's the gold that makes everything come together. So there's all sorts of things that are happening. One of my producing companies has rallied by a couple of 100% here in the last 6 to 9 months. Jaguar Mining. I can see the producing companies. I can see it in the exploration companies that there's a lot of change happening. The perception of the investors towards these stocks is changing markedly. And that's all in the last few months. So looks pretty good going forward.
We'll bring Alasdair in now. He thumps away on the money going down, as you mentioned. Alasdair, your broadcasts on King World News are fabulous. You go to King World News, usually on a Friday, and you get a succinct and really special picture on what's happened in the precious metals markets.
Yes, John, I can't really improve on what Eric was saying in terms of what's going on in the markets. I agree with everything Eric says, from my observations anyway. But I think it might be more valuable to everybody if I sort of concentrate more on the economic side, the difference between money and credit in particular, and why it is that the dollar is going down. And what I've done is I've been thinking very hard which disaster of the many disasters which we certainly face is actually going to trip the whole system over. And I've come to the conclusion that by far and away the front runner is the dollar's debt trap. And we saw with Jay Powell at this Jackson Hole thing the other day, he actually gave in on trying to control inflation with interest rates. And incidentally, trying to control it with interest rates, you can forget that. Trying to manage the economy, it's a hopeless task. The Fed will never achieve their objectives going down that route. But the point is, he gave a very clear signal that they're going to try and, if you like, manage the recession now, which of course they will fail at. But the effect of that was to weaken the dollar immediately. And I sent through, I don't know if you managed to get them up, John, but I sent through a few charts which really illustrate the position. And if you look at the US dollar's trade weighted, I mean, that has collapsed underneath a death cross. Now, obviously, it won't go down in one swift move, but I wouldn't expect that to stop until it gets down to 90. It's currently a bit over 100. So that's just pure charting. And at the same time, we see gold breaking out on the upside. Now, this, if you like, is the confirmation as to exactly what is going on in the background. So what do I mean about a debt trap? Well, a debt trap occurs when the growth in income is less than the growth in debt. Now, this is a very important point. This is really where the US government has got itself. If we take GDP as proxy for income, and it is because broadly speaking, if you get an increase in GDP, you get an increase in tax receipts. If you get a decrease in GDP, you get a decrease in tax receipts. So that we can take, if you like, as one side of the calculation. It is clear, if you look at the relative growth in income to the growth in debt, that since the year 2000, there have not been many years when we haven't been moving into a debt trap. Recently, I mean, there have been huge distortions over COVID and also over the great financial crisis back in 2008-9. But more recently, now that those distortions are more or less behind us, and incidentally, there's been no attempt to try and control the growth of debt, US debt. And I would also argue that ahead of January next year, when they're meant to fix the new debt ceiling, they're going to want as much room as possible. You can see that this debt problem is just going to get a lot worse from the debt side. And also, it is clear, to my mind anyway, that on the income side, US tax income is not going to be as good as the analysts forecast. So this debt trap is really becoming very, very real. And one of the charts I produced shows that this situation is actually deteriorating really quite rapidly now. Now, what does this mean? Well, it means that foreigners looking at the dollar, they will understand this. And if you look at the People's Bank of China, for example, okay, we know that there is a political aspect to this. They don't want to use the dollar in the Shanghai Cooperation Organization or in bricks as much as possible. So they want to reduce the involvement of the dollar. But from the People's Bank's point of view, the reason they have been buying gold is not because they're buying gold, it is because they're getting rid of the dollar. Now, this is an extremely important point. In any currency collapse, it is always the foreigners first who understand the risks in a currency. Later on, people domestically wake up. Now, I don't know how long it'll take for domestic institutions in the US to wake up to this. When you see, however, that with the death cross on the US dollars trade weighted already in place and gold seeming to break up on the upside, I would guess that hedge funds and various others are looking at this and trying to make sense of this, and it probably won't take too long for them to do so. Now, if I'm right in that, then this situation could start accelerating really quite rapidly, because not only will you have the unwinding of the carry trade, not only will you have the Japanese institutions selling dollars because the yen is now rallying, not only will you have other countries going in and buying gold because they don't trust the dollar, they're trying to reduce the fiat currency element of their reserves, but you will also have US institutions, the prescient ones amongst them, beginning to think, this sucker's going down. We have got to try and protect ourselves. And I think, as to Eric's point, you will see portfolio shifts. And these, I think, could be quite massive. The portfolio shifts out of tech stocks and all the rest of it are going to go into mines. And it's not just gold and silver, but I would suspect that virtually everything, because what we're looking at is the purchasing power of the dollar going down. And it doesn't just affect gold and silver, it also affects the values measured in dollars of virtually everything else. So we could see a real renaissance, if you like, in mining. But the problem, I think, that the investing institutions have is that nobody or very few people are actually researching the sector because it's unfashionable. It's a dirty business. Nobody wants to know about that. And anyway, there are far better things to play. That is now yesterday's story. So I think what you're likely to see on the securities side is actually a very, very sharp move upwards in mines as investing institutions try and get out of the risk, if you like, of credit. And when we talk about credit, we're not only just talking about the currencies themselves. Yes, they are credit. We are also talking about bonds, and we're also talking about equities, because equities basically are the promise of an income stream, which the management will produce under their obligation for their shareholders. It is credit. It is all credit. The only thing that is not credit is gold and silver. But in order to hedge this situation of deteriorating credit values, I think there is going to be a huge shift, or an attempted shift, into under-researched mines. And this is going to be a very interesting time. And I think initially, you probably see it with some very, very big buyers going in for the big mines, the ones where if the price falls and all the rest of it, you can't be accused of not knowing what you're doing. These are proper market stocks. But I guess that the M&A stuff is going to start coming through. It always does in the early stages, as banks and so on start to get onto this new fashion. And when it comes to the eventual outlook for gold, silver, and all the commodities, I think we've got to say thank you very much to the Asian hegemons, who basically have a story which is completely different from ours. They are building a complete industrial revolution Asia-wide, and they are doing this away from us. And we have indeed helped them get away from us by sanctioning Russia. I mean, I can't think of anything more stupid, but anyway, that is what we've done. Also going into this mix, we can see that the prospective presidential candidates in America actually know nothing about economics. And it is quite clear that one is a spendthrift, the other actually knows absolutely nothing, and we've just got to pray that someone with some sense actually gives her some economic advice. And that is going to make things a lot worse. I can see foreigners running away from the dollar, running into something else. Now, to an extent, they run into other currencies, but that's very, very limited, because the dollar goes down, we all go down. So the run has got to be into gold and silver.
Thank you, Alasdair. I want to go back. Eric, we're neighbors of yours at the Royal Canadian Mint, and the nice thing about that is the Mint is off the banking grid, and we hope it'll stay that way. But for investors to understand that mining can be holes in the ground with a liar on top, but they have their role in a portfolio that is a defense against the Great Reset. You own physical, and you got it stored at the Royal Canadian Mint. Told us your rationale, and in the case of Kirkland Lake, that worked out okay. But a combo of mines and if people don't know how to pick mines themselves, they've got to find some experts like you and Alasdair, whatever.
Yeah. Well, I own a lot of gold and silver. I mean, I own a shockingly large amount. Probably constitutes, let's say, 40% of my portfolio. And quite frankly, if you look back over the last year, if you didn't own the physical gold and silver, you weren't doing well because all the stocks were going down as a group because nobody gave a darn. It didn't matter what it was. So that sort of stood in there. And I've always realized as an individual, you want to have access to gold and silver just in case. And of course, there's lots of reasons to think that just in case situations could evolve here. We're seeing all sorts of strange things happening in many, many countries. I wouldn't be surprised post this next election that all hell might break loose in the United States because both sides are not about to accept the outcome one way or the other. And some of them have proven to be quite active about it. So I like the fact of owning physical gold and silver. I like to have access to it. I don't actually necessarily believe, John, that having it in the mint is the safest place in the world either. I mean, I'd like to get it out of the banking system for sure. I mean, I'd much rather have it in my house, I think, except that trying to protect it and secure it is very, very difficult. But you do want to have something outside of, I'm going to call it the system. And I'm not sure whether the mint is in the system or out of the system. The only time we'll know is when that day arrives, right? That they go to confiscate the gold at the commercial banks.
Now, markets are meant to be efficient. And why hasn't the precious metals market figured out the difference between paper and physical? There should be a hell of a premium on physical.
There should be. Although, even as I sit here and conjecture as to what's going to happen, there's no doubt in my mind that when the value of the physical goes up, we know that the stocks have far superior performance. Okay. They're going to go up by 2 and 3 times whatever the price of gold went up by. And quite frankly, if you investing properly, we're going to get things that go up by 10 times. When I think of Kirkland, I mean, they went up, whatever it was, 14 times. I mean, that's not a small gain vis-a-vis what else you can accomplish out in the universe of investing. And as I think about some of the things that I'm invested in now, the equities, I think, man, these things, I can see that some of these stocks will go up 1,000% because of the onrush of people into this market, where right now the institutions or the value of gold, I think, is less than 1%. There's hardly any gold produced every year. So to go to 2%, everything has to double. And to go to 3%, everything has to triple. And what's 3%? When you think of the carnage that could happen in stocks, that happened in 07, 08, that happened a couple of weeks ago. In 5 days, we lost whatever it was, 10% on the value of equities in a few days. I mean, that can easily transpire again. And I certainly expect that gold and silver physical will win the day. And I'm hoping and expect that gold stocks will win the day. So people will want to have way higher weightings in the equities and the physical over time.
Well, I want to go back to the mint because you scared the hell out of me with your remark that, and I'm aware of that factor, and family offices ask that question all the time. But most of the gold is in northern ridings across this country, and it's political suicide to shut down the gold business.
Yeah, well, I think we're way less likely to do it in Canada than what happened in the United States. We've already seen the U.S. government confiscate gold once. And of course, we have to listen to some of the comments that some of the politicians are making of what they would do if they were elected. I mean, it's just absolutely mind-boggling that they could throw away the baby with the bathwater and not seem to care. Is it going to happen here in Canada? I sure hope not. But do I have any more comfort with with the Canadian politicians as I would anybody else for that matter? No, I don't.
Canada had 1,000 tons of gold in 1960. We've got none now, so maybe hoping they'll look at the gold in the ground.
They probably should, because, you know, you can buy gold in the ground pretty damn cheap.
What other off-the-grid storage facilities are you involved in?
As you know, I store through Sprott Money, which I think uses the mint. I store through banks. Unfortunately, I have some of them at banks because I borrow money against it. And that's stored at the mint. Some of it you just have on your possession. I always think you have to have kind of a working inventory, John, just in case it blows. So that's what I'd advise people to have, a working inventory available, whatever that is for each person.
Now, do you guys have any final short bits of advice? You basically capitalized everything that people should know. What I find fascinating is that out of the people on my email, there are probably about a third of them who are attending today. So the great contrarian indicator is that people are not really paying attention yet.
Shall I come in on that?
Yeah.
I'd like to follow up actually on what you were discussing with Eric. If the Americans decided to ban gold ownership or require American citizens to submit their gold in return for, what, $42.22 an ounce, I can tell you that gold would go bid only. I was actually discussing this with a friend of mine from the stock market back in the 1970s. It was in this country when Jim Callaghan was Chancellor. He restricted ownership of sovereigns, and he was dealing in sovereigns at the time. And he said suddenly there were none available. Boom, it was bid only. And I think this, if you like, is why it would be a huge mistake for the Americans to go down that route, particularly when the Asians have so much gold. It would just drive up the value of gold in their holdings, I mean, just immeasurably. So I'm not saying that the politicians won't do it. What I'm saying is it would be the most stupid thing any politician could possibly do.
Maybe, John, I should follow up, because I do think of two things. So, for example, I mentioned that you can buy gold in the ground very inexpensively. And I have in my mind a company that I am buying gold in the ground for $10 an ounce. That's based on their latest 43-101 in Alaska, right beside an existing mine. The company's name is Free Gold Ventures. I'm a very large owner of it. Okay, so I'm biased, obviously. But they say they have 20 million ounces. There's some estimates out there that based on the drilling so far this year, they have 25 million. And it's my view they might very well get to 30 million before the year is up. And it trades at something under 300 million US. So I think I'm buying gold for $10 an ounce. Now, I read an article recently where someone made the argument that it's ridiculous to think that you should be able to buy gold for under $200 an ounce. And almost any explorer's gold is not worth $200 an ounce by the market standard. You'd be lucky if you get between 50 and 100. But I think that article, with gold at 2,500, it is ridiculous to think you could buy something for 200 that you can sell for 2,500. Now, I realize there's a lot of work to do to go from getting it in the ground to getting it sold for 2,500. But we also have the opportunity where that price may not be 2,500 when they get it out of the ground. It could be 3,000 or 4,000. And what did that make the gold worth? So I think that's one opportunity. I also have another stock that I own. I'll mention this, Jaguar Mines. I own a big piece of it as well. I'm sitting here thinking, okay, they're producing 70,000 ounces a year now. I think they'll be at 150,000 ounces by the end of 25. And I think they might be able to produce it for $1,000 so they can make $1,500. My God, they'd make 225 million pre-tax US, and the market cap's about 350 Canadian. So I can almost buy it at 1 times cash flow, a little more than that. But it shows you that of course, nobody's analyzing, so nobody knows it. But when they finally figure it out, it's like Kirkland Lake. When they finally figure it out, they'll all pay for it. So I think there are opportunities there if you are alert and can do your own work, which most people really don't have the time to do it, that there's some incredible values where you could imagine, okay, I could see myself making 1,000% on that. What if I went to 10 times cash flow instead of 1, which is not unreasonable, by the way. So I think there's all sorts of opportunities out there. I don't talk about the big stocks. I don't think the value is ever in the big stock. It's in the up and comers who are finding things and finding ways to increase production and decrease their costs. So again, just to reiterate, I think there's huge opportunity today, particularly as we're just starting into this new bull market.
Eric, your daughter Larissa is coming on to talk about Sprott Money in a couple of weeks. And Sprott Money can take care of people wanting to buy coins, wafers, bullion, and store it, hopefully off the grid. Alasdair, you deserve a commercial because your Substack is marvelous. And anybody who wants your almost daily opinion and handholding on this subject should be subscribers to your Substack.
Thank you very much for mentioning it. It's all about education, and a collapse in the purchasing power of fiat currencies is a disaster for everybody. I mean, it really is. And it's therefore, I think, terribly important. And I have a mission, if you like, to try and make people understand what the danger is and how to avoid it. And, you know, Eric is absolutely right. I mean, talk about efficient markets, not efficient markets, inefficient markets. They're not pricing mines, gold mines and all the rest of it at all where they should be. There is not the people actually doing any research. They're just ignoring the whole thing. I don't think I've ever seen a situation before where you've got a bull market where things are going to new high ground with almost no public participation whatsoever. I mean, that's still ahead of us. The buyers are yet to come in. And when they do, I don't think you'll see things for dust. But underlying it all is actually the collapse in the purchasing power of the dollar. That is the thing which we must understand.
Eric, there's one final question for you. What's your opinion on cryptocurrency?
First of all, let me point out with Alasdair. Alasdair just started his service, and I know I was one of the first subscribers, and it's always refreshing to know what he has to say. And I encourage all your members of your dog bone club to listen to Alasdair. He's one of the most important guys in our business. I've never been involved in crypto yet, John. And I'm always amazed when I sort of look at it and realize there's a lot of the world participating in crypto. Like way the hell more than in gold, by the way. Like it's shocking. I think something like 30% of people own crypto. Well, I wish that 3% of them would own gold, you know, would be off to the races here. So, but I have not been a buyer, and I must confess, I don't think I really understand it. I know some people say it's a substitute for a fiat currency. I think I'd prefer the gold to cryptocurrency.
Well, if you'd taken out a mortgage in Bitcoin when it was $50 and had to repay that mortgage today, it would be a bit of a challenge. Eric and Alasdair, this is unbelievable. It's so good. And you're invited back anytime. Thank you. Okay.
Okay, guys.
And thank you so much, guys.
Okay.